Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate filings and try to find the hidden stories. Today we are diving deep into the latest financial report from VPLM, Incorporated, a company that has been trying to make a splash in the tech world with its focus on VoIP technology and patents. They have a lot of patents and they are being very protective of them. This annual report tells us what happened with the company over the past year and what they expect in the future. It is packed with financial details, risks, and even some legal battles. Before we dive in, if you appreciate getting straight insights from these complex documents, make sure you are subscribed. And if you want to discuss these filings or anything else corporate, head over to our Discord community, linked in the description below. So this company is officially known as VoIP-PAL.com Incorporated. They are trying to make money by licensing and enforcing their patents. They have a big portfolio of patents mostly related to voice over internet protocol or VoIP technology. Think about how we make phone calls over the internet. That is where their technology is rooted. They are also involved in some interesting legal proceedings related to these patents. Now, the core of their business revolves around these patents. They have patents covering things like how communications are sent and routed over different networks, how to handle lawful intercept requests, which is basically tapping phone calls for law enforcement, how to improve emergency calls like 911 support, and even how to bill for these services. They are even suing some pretty big companies like Amazon and Verizon for allegedly using their patented technology without permission. That is a bold move. These lawsuits are expensive and time-consuming and can definitely impact a company's resources. Let's look at some of these patents. They have patents like US patent number 8,542,815, which is about classifying calls to figure out if they are on a public or private network. Then there is US patent number 9,179,005 that deals with routing those communications. They also have patents for lawful intercept of communications like US patent number 8,422,507, which describes how to legally intercept VoIP calls. It seems like they are trying to cover all angles of VoIP technology. The legal section is quite extensive and shows the company is very active in defending its intellectual property. They had a case against Amazon.com Incorporated that was dismissed. They also had lawsuits against Verizon Communications Incorporated and T-Mobile Incorporated. Some of these cases were dismissed and others are still ongoing. These legal battles are a huge part of their strategy and also a significant drain on their resources. They also mention some antitrust lawsuits, which means they think some big companies are unfairly limiting competition in the telecom industry. That is a serious accusation. Now let's talk about the money. Since this is a 10K report, the financial tables are what we really want to dig into. Even though the company is considered a smaller reporting company, they are still required to provide this. Looking at the balance sheet as of the 30th of September 2025, we see their assets and liabilities. They have cash in the bank a little over $1 million. That might sound like a lot, but considering their expenses and legal fees, it needs to be put into perspective. Their cash balance is $1,060,499 compared to $2,369,413 the previous year. That is a noticeable drop of roughly 55%. This means they spent more cash than they brought in during the year for their operations. Their total assets are $1,143,199, down from $2,459,133 the previous year. A significant decrease in assets usually means the company is either selling off assets or its existing assets have lost value. On the liability side, they owe $173,932 to others. This is down from $300,782 from the prior year, which is a good sign that they are managing their short-term debts. And then there is this huge number here in additional paid in capital $107,322,167. This usually represents the money investors have paid for stock above its par value. It shows a significant amount of investment has gone into this company over time. But the big story here might be the deficit. It is currently $109,584,935. That is a big hole, and it means the company has lost more money than it has made since it started. This is very common for companies in development or those heavily involved in litigation, but it is still something to watch. Now let's look at how they performed over the year in terms of making or losing money. The net loss for the year ended the 30th of September 2025 was $6,227,153. This is an improvement from the previous year's loss of $10,172,194. So while they are still losing money, they are losing it at a slower rate. That is a positive trend. A big chunk of their expenses comes from what they call general and administrative expenses. For 2025, these were $6,244,756, down from $9,592,512 in 2024. That is a 35% decrease, a really significant drop, and the report says this is mainly due to lower officer and director fees and fewer legal bills. It is good to see them cutting down on these costs. Interestingly, their amortization expense also dropped to zero. This means they are no longer amortizing their intangible assets, which are their patents. This could be because they determined their patents no longer had any value to amortize, or it could be related to some accounting change. This table shows us where the company's cash came from and where it went. For operating activities, they used $1,858,914 in 2025. This is less than the $2,358,051 they used in 2024. So they are becoming more efficient in how they spend money on their day-to-day operations. Financing activities brought in $550,000 in 2025. This is a big drop from $2,509,875 in 2024. This means they raised a lot less money from selling stock or other financing methods this year. This could be a concern if they need a lot of capital to fund their operations or lawsuits. And as we saw on the balance sheet, their cash at the end of the year was $1,060,499. One thing that stands out is the amount of stock-based compensation. In 2025, it was $4,399,684, and in 2024, it was $7,017,925. This is a significant expense, and it means they are giving out a lot of stock options and warrants to employees, consultants, and others. While this is a way to conserve cash, it can also lead to dilution for existing shareholders. This is a key area to watch for VPLM Incorporated. This section talks about potential future liabilities like ongoing lawsuits or legal claims. They are involved in several patent and antitrust litigations. Some have been dismissed, some are ongoing. The outcome of these legal battles is uncertain and could have a material impact on the company's financial health. Now, this part is really interesting. The company's management admits that their internal controls over financial reporting are not effective. They mention material weaknesses like the lack of a formal code of conduct, no dual authorization on bank disbursements, and a general lack of reconciliation and reviews. This means there could be a higher risk of errors or fraud that might not be caught. They are working on fixing these issues, but it shows a weakness in their operational structure. Looking at their stock, we see they had 3,755,305,519 shares, outstanding as of the 19th of December 2025. The market value of their stock is quite low, but that is not unusual for companies in this situation. Let's talk about the people running the show. Emil Malik is the Director, Chief Executive Officer, and President. He co-founded Digiphonica and oversaw the development of the patents. Jin Kwang is the Chief Financial Officer with a strong background in finance and auditing. Kevin Williams, Dennis Chang, Clifton Saylor, and Austin McDonald are directors. It looks like a team with varied experience. Now for the big picture, VPLM Incorporated is a company heavily reliant on its patent portfolio. They are aggressively pursuing legal action to protect and monetize these assets. The financial statements show a company that is burning cash, but at a slower rate than before. The increased stock, base compensation, and the identified weaknesses in internal controls are definitely points of concern. However, the company's strategy of monetizing its patents through litigation and licensing is a high-risk, high-reward play. The success of this strategy hinges on winning these legal battles and securing favorable licensing deals. Without significant revenue streams from these efforts, they will continue to rely heavily on financing, which can lead to dilution. They are in a very precarious position, but their patents could be very valuable if they can successfully enforce them. Alright, that is our breakdown of VPLM Incorporated's latest filing. What do you think about their patent strategy and their financial situation? Let us know in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community in the description for more discussions. Thanks for watching, see you next time.